It's Friday, and, you'd think everyone would be winding down for the week, ready for the weekend.
Yeah, you'd think so.
Not in the financial world.
Nope, not at all.
Yeah.
Especially not today.
The latest U.S. jobs report dropped this morning, and, well, let's just say it's got everyone buzzing, scratching their heads a bit.
Yeah, it's definitely one of those reports where you take a look at it, and on the surface, the numbers seem pretty darn good.
Right, like at first glance, you're thinking, okay, things are looking up.
Yeah, exactly. But, like with anything, it's what's lurking underneath. Look a little closer, and you start to see why the market isn't exactly jumping for joy.
Okay, so walk us through this. The report says the U.S. added 254,000 jobs last month. I mean, that's way more than anyone was expecting.
It is.
And wages are up, unemployment is down. I mean, just on the face of it, that all sounds, pretty positive.
Sure, it does. It does. But, and this is a big but, a big chunk of those new jobs, they're coming from government positions.
Oh, interesting.
Not so much from private sector growth, which, let's be honest, that's what really gets investors excited, right?
Yeah.
Private sector, that means businesses are confident, they're expanding.
So it's not quite the economic boom the headline makes it out to be.
Yeah, you got it. Plus, there's another thing to consider here. Think back, this isn't the first time we've seen a surprisingly strong jobs report right before an election.
Right. Election year, always interesting.
Always. And, some analysts, they call this little pattern window dressing.
Window dressing, so like making things look a little prettier than they actually are.
Exactly. You know how it is. Governments, they've been known to, well, maybe try to nudge those economic figures just a tad in the short term.
Trying to sway some voters, perhaps?
Well, you said it, not
Okay.
me. But anyway, for those of us who are in it for the long haul, analyzing the market, looking at the bigger picture,
Right.
we got to see past that.
Absolutely. So how does this jobs report, this window dressing potentially, how does that tie into what's going on with interest rates?
Good question. And that's the real head scratcher today.
Because it also seems a little well off.
It really does. See, normally a strong jobs report like this, everyone would be thinking, okay, interest rate hikes are coming.
Yeah, that's kind of the usual reaction.
Makes sense, right. Strong economy, more demand for loans, pushes interest rates higher. It's supply and demand. But today, not seeing it.
No, it's like the opposite. It's like the market is saying, nah, we're good. Safe investments like bonds, it's like they're acting like a rate cut is coming. But then you look at the NASDAQ, and it's up, over 1% today. Still riding high.
Over 1%, yeah.
Like it's 2021 all over again, as if there's no chance of a slowdown. What's going on here?
It's this disconnect, and this is what I find so fascinating. It tells me that the big players, the experienced investors, they're looking beyond these headlines. They're thinking long-term, and they're not convinced the good times are going to last forever.
So for those of us who, maybe aren't seasoned investors, what's the big takeaway? What should we be thinking about?
Well, I think the key is, and this always applies, but especially now, don't get caught up in the hype of a single data point. The economy is not a simple thing. We can't just look at one report and make a decision.
Right. Don't jump the gun.
Exactly. Look at the bigger picture. Think about your own strategy, your own long-term goals.
That's great advice. Speaking of looking at specific opportunities, yesterday we were talking about AMD, and you mentioned you were, considering maybe making a move there. It had a pretty big move today, didn't it?
It did. Yeah, AMD broke out above $170, and with strong volume, too. That's always a good sign.
So for someone who's, watching this, they see AMD making this move, what would be like their next step? What should they be thinking about?
Well, like any good trader, you got to have a plan, right? And that means knowing, okay, this is my entry point and this is my exit point. If things go well, awesome. But you got to know when to take profits. And with AMG breaking above $170, I'd say a potential target to watch, keep an eye on that old high, somewhere around, let's say, $175 to $184.
Right. So you've got that potential upside in mind. But what about if things turn south?
Equally important, risk management. You got to set that stop loss level, maybe somewhere around $157.
Yeah.
Just in case the stock takes a turn.
Right. So you've got those boundaries set. No matter what happens, you're a little more prepared. Now, I know you're watching everything. You've always got your finger on the pulse. Any other quick takes? What about Tesla? What's happening there?
Yeah, Tesla, she's just kind of hanging out there today. Relatively steady. We're really watching for a couple of things. A break above $266. That'd be a good sign to maybe think about getting in. Or on the flip side, if it dips below $235, that might be a signal to, hold off for a bit.
So no need to jump on the Tesla bandwagon, just because it's Tesla. Got to wait for those levels, just like we were talking about with AMD. What about Amazon? Anything interesting happening over there?
Amazon, kind of similar story to Tesla today, actually,
Mm-hmm.
holding in a pattern. Strong support at $182, though, so that's definitely a level to keep an eye on. Yeah, if it holds there, could see a nice little bounce. But again, patience, patience, patience.
Right. It's all about like seeing how these things play out. I mean, it's fascinating, isn't it? When you start to put all these pieces together, it makes you realize, it's not just about reacting to like every little headline, right? There's actual strategy involved here.
100%.
So any other stocks on your radar today that we should be watching?
One that comes to mind, Microsoft.
Yeah.
Microsoft's interesting. It's getting close to a pretty critical level, that 200-day moving average. We talk about those a lot. And if it breaks below, say, $401, that could be a sign of a potential sell-off.
Okay, so Microsoft investors, $401. That's one to watch. It's funny. We were talking earlier about, how easy it is to get caught up in the hype. And it reminded me of that crazy story, I think it was last year, about that Canadian investor who made, and then lost a fortune trading Tesla options.
Oh, yeah. Oof.
I mean, talk about a roller coaster. Can you walk us through that one? What happened there?
Oh, man. It's like a cautionary tale,
Yeah.
So it was back in 2021, right? The market was, you remember, on fire.
Yeah.
Especially for those, hot tech stocks like Tesla. And this guy, we'll call him Mark. He gets into trading Tesla options. Starts with $88,000, something like that.
Okay.
And you got to figure some luck was involved, some good timing, who knows. But his investment, it explodes, like skyrockets.
Yeah.
To get this, over $4 billion?
Mm-hmm. $4 billion with a B.
Yeah.
Seriously.
Billion. It's crazy. It's actually mind-blowing. And here's the thing about the markets.
Right.
They can turn on a dime.
Yeah.
And they did.
They did. 2022. Rough year.
Brutal. And Mark, he learned that lesson the hard way. Lost it all.
Wow. Everything.
Yeah.
Gone. Talk about what a reminder that what goes up
must come down, right? Gravity of the markets. Classic example of leverage. Leverage is a double-edged sword. It can magnify your gains, but man, when it goes against you.
It goes against you hard. So for like the everyday investor, what's the big takeaway here?
It's all about managing that risk, right? You can't get caught up in, thinking you're invincible, especially when a bull market makes things feel like, smooth sailing.
Right. It's easy to get swept up in the moment.
It really is. That's why no matter what, you got to have a plan, Stick to your strategy, understand your own risk tolerance, don't get greedy, and don't get scared either. Easier said than done, I know.
Oh, for sure. It's a good reminder, I think, that everyone's different, right? When it comes to investing, there's no one-size-fits-all approach.
Absolutely not.
Yeah.
Your goals are going to be different from the next person's. Your risk tolerance, your whole financial picture. It's about, doing that homework, figuring out what works for you, what you're comfortable with.
Great advice. This has been, really, really fascinating stuff. As we wrap up, any final, words of wisdom for our listeners out there? What should they kind of carry with them as they, keep navigating this crazy world of investing?
Here's something I always come back to. You hear it all the time, right? The market's going up, the market's going down. Everyone's got an opinion. But here's the thing. What if everyone's already thinking the same thing? What if that sentiment, that, feeling in the air, what if it's already baked into the market?
Ooh, I like that. So, it's almost when everyone's saying the same thing.
That's when you got to be careful, Take a step back, look for those contrarian indicators. Maybe everyone's wrong.
Right. Zig when everyone else is zagging. Love it. Well, this has been fantastic. Thank you for diving into all this with us today. Really appreciate it.
My pleasure. Always fun to geek out about the markets a bit.
And for everyone listening, thank you for joining us for the deep dive. We'll catch you on the next one.